All right, guys, I was just taking a look at my results for SPY, how I've been trading SPY in my Robinhood portfolio. And let me tell you something, I've been extremely profitable selling SPY options, as well as just generally trading SPY. It's one of the most predictable things to trade. It's one of the safest ETFs, has amazing volume. And in today's video, I'm going to talk about why you can technically just trade SPY. You don't really need any single stocks. You don't really need anything else. You can just trade SPY and make consistent income, whether that's $5,000 a month, $10,000 a month, or even more just trading SPY. So let me talk about high level what SPY is real quick. It's basically an ETF that has 500 of the biggest companies in the United States. So that includes Goldman Sachs, that includes Apple, Amazon, Google, Microsoft. It includes Caterpillar, includes some healthcare companies like Johnson & Johnson. It basically includes everything. So you don't actually need that much diversification in your portfolio or any at all if you just have SPY. So the simplest SPY strategy that you can sell, actually, I'm going to talk about multiple. I'm going to talk about zero DTE trading. I'm going to talk about covered calls on SPY, selling puts on SPY. And I'm going to show you the mechanics of how to actually go about SPY trading to make a consistent income. And really the most important thing is not to lose money, because SPY is the safest. If you trade single stocks, they have a lot more volatility. Whereas SPY, there really isn't a whole lot of volatility. Now, sure, the markets do go down, but in the long term, it's very hard to lose money on SPY. It's practically impossible over a long enough time horizon, 2 years, 3 years, to lose money. And many of my retirees, the students that I work with, they're just trading SPY and QQQ. By the way, SPY and QQQ are both very similar, just QQQ has a bigger focus on technology companies, rather SPY has a little bit more variety. All right, I'm gonna show you what SPY, one of my favorite strategies, is right now. Now, I'm going to show you a small account strategy, a medium account strategy, and a large account strategy in this video. So you're truly in for the best SPY video, hands down. So if you're not subscribed, you're totally missing out. Comment down below. Uncle Henry hitting us with the SPY fire or whatever. Just comment something. I want to see you guys get fired up. Alrighty, so let's go over my history of SPY, because I am trading SPY and QQQ 0DTE right now. I'm going to scroll down here, and again, this is all the good stuff within SPY. I mean, we got tech, we have consumer cyclical, healthcare, consumer discretionary, defensive, utilities, basic materials, real estate, energy, and yeah, here's some of the top holdings. So of course, the top 10 holdings make up a huge portion of SPY. That's fine. I mean, like, you want these big holdings anyways, right? So let's scroll down here and let's look at my history. Now, I will say that I am trading QQQ. Looks like I'm trading QQQ a bit more than SPY right now. So yeah, actually, let's go into, well, you can see here that I've been essentially selling a bit of zero DT options and very short-term options, with the last trade here really being on May 5th. And then yeah, essentially it expired on May 9th. But QQQ I've been doing daily, which is absolutely insane. Like in my account, QQQ has been so profitable. I think that I'm about to like basically shock you. Yeah, so check it out. QQQ right now, if we scroll down, it's very similar, but just has a bigger tech focus. I've been making absolute hand over fist, bicep over tricep money, like literally all the time. So 23 hours ago, I made $870. June 4th, same, zero DT trade. See, June 4th expiration, $725. June 3rd, $930. June 2nd, $1,110. May 29th, again, zero DT, same day. You can see here, I opened it May 29th, expires May 29th, 441. 28th, 680. 23rd, I skipped a few days here. It's because like I'm very busy right now with coaching, and my one-on-one coaching is like basically full. I'm only like really accepting people on a conditional basis right now, if I feel like they're a good fit. But yeah, it was busy, so I skipped a few days. But you can see here how on May 23rd, actually, I made 2 trades. It was wild because I actually collected like over $2,000 that day. On May 23rd, I collected $1,960, and then I collected another $168. Again, I skipped a couple days, and specifically, these are my coaching calls. So here's like probably a Monday, and then this is a Wednesday. I'm assuming, because when I skip 2 days, it's, I have Monday and Wednesday calls. So yeah, on Monday I made 570, and again, I mean, the list just goes on, like 475, and like I've literally won so many trades in a row. So we'll count actually all the current trades I made since the past basically 30 days. So one zero DT trade, right? They're all successful. You can see because zero DT trade, right? They're all successful. You can see because I'm not like closing any of them. So this is the 12th,
14th, 19th. I was trying to put in a trade, but I had to cancel it. You can see here how, yeah, I'm just like not closing these trades. They're just expiring, worthless. And that's what's nice about SPY and QQQ is when you sell a put option, and I'm going to talk about a smaller account strategy as well in this video. But yeah, let's just focus on me doing the big account strategy first. I have 3 strategies for you actually. So 1 trade, 2, so 2 went successful, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades in a row. I'm 12 for 12. Like, can you imagine? Like, yeah, just super profitable strategy that I've been using. And I've been essentially following the guideline that I went over, which is I'm looking at like support and resistance, but I'm also looking at just price volume and momentum of the ETF for that day. And here's one of the biggest guidelines that I follow.
When the market opens up, it's unlikely to fall 1% after 10 a.m. Okay, listen to that one more time. After 10 a.m., if the market is up 1%, it's unlikely to end the day at flat. If it's down 1%, it's unlikely to end the day at negative 2%. If it's down 2%, it's unlikely to end at negative 3%. At 10 a.m. is the most important inflection point because the first 30 minutes of trading in the option market or just in the general stock market as a whole is the most volatile. So after the first 30 minutes, you get a really good sense of where the market direction is after that point. So once 10 a.m. hits, you can just sell a put option that is about 1% out of the money. So let me show you what that looks like.
All right, so let me show you how that actually works, like how you actually go 1% lower and you actually open up this trade. So let's go to trade QQQ options. Again, this is very similar to SPY, so I could use SPY as well. Very similar, but yeah, let's just go with QQQ right now. So QQQ, let's go to sell, put, and I can do 2 trades. I'll do SPY as well if you like. I'll show you an example. So yeah, 0DT, June 10, 532. So if we go down 1%, right? 1% is essentially $5. $5 lower than this is going to be 527. So if I go for the 527 right here, it's not a whole lot of money today. The volatility is actually really low today. It's actually typically higher. So what I might do, if I expand this option right here, I mean, this is still going in with my guidelines of like a low delta. So I'm just going to go for 528. And yeah, I'm just going to click continue and I'm going to do like a bigger account trade right now. I'll do essentially, I'll put, do like 20 of these. And yeah, I'm going to collect $20 per contract here, 20 contracts. So I'm going to collect $399. So yeah, I'm going to go ahead and open this up. There we go. I actually got filled and I collected a little bit more. So I collected $419. Now, yeah, same story for SPY. So if I go to SPY right now, I'm going to show you a spread on SPY as well. But let me first just go to SPY, trade here. If I sell, put, again, 0DT, that's what makes SPY and QQQ both so amazing, is they have lots of 0DT options. So you can make like really like daily income. You can literally not have to hold options overnight. So like instead of being concerned like, oh, what's going to be the news after hours or in the morning, you don't have to hold anything overnight because this expires in the same day. So again, $6 down is going to be like roughly 594, 595-ish. Again, this delta is super low, so this would be super conservative. But you can absolutely go a little bit higher too. So like 597, 10 delta is good. I still need some cash for my coaching session today, so I'm gonna just open up 3 here, just to kind of show this example and put my money where my mouth is. That this is a viable strategy that I do teach, and I go into like much greater detail, including in my coaching sessions. I'm actually using this strategy slightly with margin as well, but that's like not this video. It's a bit more complex. But yeah, I just filled the contract, 3 contracts, and I collected some cash there. Now, what I do want to talk about is also put credit spread, because you might be thinking like, well, I don't really have the capital to open a position like this. This is like just way too much money. Well, you can absolutely use lower capital, and you should. Like, why would you put up $50,000 when you can essentially put up like 500? So I was going to trade SPY options, and I was going to sell put. Now, I'm not going to do a 0DT trade because they just don't make sense for like super tiny accounts because you're paying a lot of end fees. You can still go for like a short-term trade like June 20th. So if I go to June 20th here, which is like essentially just a little over a week, I can still go down to 590, which I think is a pretty good level for SPY. It's definitely a little bit on the higher delta. But again, say you want to grow a small portfolio like faster, or even if you have more money, but you just want to grow faster and more aggressive. So you would sell like a 590 put here, and then you would buy, essentially you would go down by 5. So instead of like 590, you're going to go down to 585, and you're going to cover yourself here by buying a put option. This right here is a put credit spread, right? So this put credit spread, you're essentially risking 500 and not even 500 because you're collecting $80. So you're really only risking like 420. So this right here is essentially a 20 plus percentage return. So you're making over 20% in like a week, which is absolutely insane. Now, the reason why this is so high is because you can lose, you can lose the entire amount of capital that you put in. So, which is going to be the 420. Okay. So you can lose your entire collateral on this trade. And that's why this trade is definitely a bit more risky. And it's not my preferred strategy, but if you have a smaller account, you pretty much have to kind of have more of this strategy, because to grow a small account, you kind of have to take more risk if you want big gains, you want to grow it, like you're just going to have to take more risks. That's just like how life works. So the scenario that you don't want to be in, and when you would want to close this trade, is if essentially it went down below 590. You don't want to lose the entire 420 here, or the collateral. You can count it as 500, but you collected 80. So either way, you don't want to lose too much money. You want to protect yourself as much as possible, and you should essentially close it as soon as it hits 590. If the momentum shifts, then you want to protect yourself and cover your position by buying it to close. But oftentimes, a put credit spread, it'll oftentimes work out in your favor as long as the market is steady. And by the way, like honestly, I do hold put credit spreads typically to expiration, because even if they hit the strike price and you're thinking about closing out the position, oftentimes I have such a small amount in put credit spreads, and this strategy is still going to be successful at expiration many times, even if it hits the strike price. Because, oftentimes the market is emotional and it overreacts at the downside in the short term. So there's still lots of time left and it just hits your strike, then, it's still okay to hold the position to expiration. And to be honest, I like to keep my management even lower. So I will oftentimes hold it, but it does come at a risk of losing more collateral. So there's two things that you can do. Either close it right away, which will reduce your risk, but honestly, you still have a higher return holding this position until expiration. Now, the next strategy I'm going to talk about, you don't have to hold it until expiration. The next strategy I'm going to talk about is a leap strategy. And this strategy is much more versatile. It's way easier to manage a leap trade versus a put credit spread, right? So the first strategy we talked about is selling puts. That's super easy, very little management, because if you have a bigger account, you're happy to own SPY or QQQ. With a put credit spread, you have probably a smaller account, or you're looking to make big money, and those are much more difficult to manage. The leap strategy is super easy to manage, and it's super fun because a leap option, basically, you are in control. So let me show you an example. And let's go to trade SPY options, buy call, and I'm going to buy like something more longer term. So I can buy March 20th, 2026, and this is going to be a lot of time and essentially counts as a leap option. Now, the benefit of a leap option, you can see right here, is because leaps have such a long expiration, sometimes they're 18 to 24 months long. Time decay of the option is super low. So you're not really racing against the clock like with other short-term options. Instead, your options decay super slowly. So you can see here, like if it's over 100 days, it's just barely losing any value. So you don't really have to worry about the theta time decay at all. Now I'm going to go to buy call option, and you can essentially just buy a call option that's in the money by a bit. So here, 550. Okay, 79 is going to be a little bit too much. Let me go to 580. Okay, perfect. So I'm usually going for a 70 delta. 70 delta is like really that sweet spot for me. And here you can see that this is still pretty expensive. However, it's like 10 times less. So if you were to buy SPY, like 100 shares, it would be like $58,000. This call option right here basically only costs $5,900. So it's 10 times cheaper to buy a leap option. You still get to control 100 shares of SPY. The leap option is amazing because low theta and very high leverage factor. You get pretty much all of the benefits at at a cost, of course. This call option still costs money, and SPY will have to go up for you to break even. However, it's 10 times less cost. So if you enjoyed my 3 strategies in SPY, make sure you subscribe. That tells me to make more videos like this. And if you want to learn option trading and you want to retire, then check out this video right here on retiring with option trading.